If you're a younger person or just honestly somebody who's looking to maybe revisit their health insurance and maybe take a different route than what they're typically used to, what are kind of the standard options for
Yeah.
someone from uncovered to their corporate plan?
Yeah, I think you have kind of four options. One is if you're employed, your employer most likely will have an option for you. So we can talk about that. If you're not employed or if you work for a small company, then you have to go to you can go to healthcare.gov, which is an option. So this healthcare.gov is something that was started with the Affordable Care Act about 15 years ago, plus or minus a couple years. So this is a government, in essence, sponsored health plan. So it's not Medicare, Medicaid, but it is still for sure government sponsored. Third is you can go uninsured, or four, you can go and do an alternative to health insurance like CrowdHealth. So if we're talking, this is gonna be released in October, November. You're going through this employer-based thing, so we can talk about that one first. And I think the thing that people need to understand, there's a couple numbers here that you need to really focus in on. One is how much is coming out of your paycheck every couple weeks for this. So take a look at that. If you're a single person, it's probably around 100 to 200 bucks every 2 weeks. So that's 200 to 400 bucks a month that you're spending on health insurance. A lot of times you don't pay much attention to it because it comes out of your check. But the things that you need to look at there are, one, how much is coming out of your check, and two is what is your deductible. And so the deductible is how much you have to pay before the health insurance plan will pick up anything.
Yeah.
Right. So let's just say we have a $5,000 injury. A lot of times these deductibles are $2,500. You got to pay the first $2,500, and that before the health insurance will pay anything. There's also something called co-insurance. So above that deductible, oftentimes there's a 10 or 20% co-insurance. So you have to, in addition to your deductible, you have to pay 10 or 20% up to what they call the max out of pocket, right? So let's just say your co-insurance is 10%. So $2,500 deductible, $5,000 total event. You're paying the first $2,500, and then you're paying 10% of the remaining $2,500. So another $250. So that's the way that works. In addition to that, you're paying copays. So if you go to the ER, there's probably another copay. If you're going to the primary care doc, there's a copay. If you're getting meds, there's a copay. So there's pretty much a copay for everything else that you have to pay for. So what they're doing is they're nickel and diming you to make sure that you get every little piece out of you that they can, and it's masked in all of these terms that nobody fully understands. So pay attention to all of those because they're all very, very important. It's not one of those things, if you get insurance, everything is covered.
Yes.
The other thing to pay attention to is in-network versus out-of-network, right? So most of the time, 99% of the time, you have a network. So if you go to a doctor outside of that network, there is an additional deductible on top of your existing deductible for out-of-network doctors. There's also additional copays. And so if you go to the hospital, very few people understand this. If you go to the hospital that is in-network, very few of the doctors that are in that hospital are actually employed by the hospital. So you can go to the hospital for an ER visit, say you're totally unconscious, right? It's something big. Your anesthesiologist to do the surgery on you to get you back to health might be out of network. So you're paying the in-network for the hospital, you're paying out of network for the anesthesiologist. Reminder, you're unconscious, you have no decision-making skills in this, and that anesthesiologist is really expensive, right? So
Wow.
That's a lot of data and a lot of information. All of it is to say is be careful, because people think, again, health insurance is going to pay for this. In reality, there's a lot of other things that you have to consider when you have health insurance.
So with option one, if you were listening to this and you were an employee, are there any differences in terms of what you would elect for your insurance if you were single versus if you were a dad that had kids and was married?
All of those terms, all of those financial payments are the same if you're with a family or not. It's just going to multiply by 4 in essence. So while it's $100 to $200 a paycheck for your an individual, it's probably 4x that if you are with a family. So you're paying probably 3 to 4x. So it's $300 to $400 a paycheck most of the time when you're a family. So some of the bigger companies are a little bit better. Some of the smaller companies are a little worse, and that's why that has a pretty significant range there. The thing that a lot of our members do, which you can do as an employee, is ask to get paid as opposed to getting health insurance. So what we've had members do, and we've had members do this for small companies and big companies, is if you go to your employer and say, hey, listen, I know you're offering me health insurance, but what if I say no to this health insurance? So for a single person, it costs the employer somewhere between $5,000 and $7,000.
Wow.
You can say, hey, I'm going to say no to this. Will you up my pay a little bit since you're going to save money for not having, to pay for my health insurance? And oftentimes, especially with the smaller companies, they will do that.
Oh yeah.
So
totally incentivized.
They're totally incentivized to do that, right?
Yeah.
So instead of paying $5,000 to $7,000, what if you say, hey, will you pay me, an extra $2,500 a year? They're better off. Oftentimes you're better off because then you can do with that money what you want with it. And that oftentimes works. We've had a lot of people do that. A quick tip for people who are going into an employer at this time and want to negotiate this. What we have found to be successful with CrowdHealth members is people go in and negotiate their salary. Let's just say it's $100,000. And they have a family. A family costs an employer about $20,000. You can say, hey, instead of me taking the insurance, will you give me $110,000? And oftentimes, if you negotiate your salary first and you get to a resolution on the salary, then you can go back to them and say, hey, I know my salary's 100, but I know this insurance is here. Will you give me a little extra if I say no to your insurance? Again, small companies oftentimes will say yes.
That's awesome.
Yeah.
Where do you think most of the fear lies in this decision-making process when you're a corporate employee and you're trying to figure out, what path to take?
Yeah.
Because it's either fear or like lack of education, which is probably a combo of both, but people just seem to opt in because it's just like the path that everyone else does.
Yeah, it's the lack of transparency is the biggest question mark, and the inability to know exactly what's going to happen.
Yes.
Right. So you can say, oh, I want a really low deductible plan, which means you're going to pay a higher premium, or you can have a high deductible plan, which means you're going to pay a lower premium. Right. And so people oftentimes, when you're young, you go with the high deductible plan because we all think we're indispensable, right? And that often is the right case. All I would say is make sure you have enough money in the bank for that deductible.
And what would those deductible ranges look like? They could be anywhere from
$1,000 to $5,000 for an individual.
Okay.
For a family, it could be a couple thousand to $10,000 on the employer side. Now, when we move to the healthcare.gov side, those numbers change a little bit. They all kind of go up. And so, on healthcare.gov, most states have a healthcare.gov state exchange is what they call it. So when I say healthcare.gov, it's either your state exchange or actually healthcare.gov. But in essence, this is a state-sponsored marketplace where plans put their different policy options, and you can go in there and choose one. Oftentimes, these are significantly higher in terms of cost. So for me and my family, I looked at the healthcare.gov plan for 2024. So this was about a year ago. And mine, I have a wife and two girls, and it was $1,400 a month, and I think it was an $18,000 deductible. I think the co-insurance was 20%, and the max out-of-pocket was $25,000. So in essence, what that's saying is I'm paying $1,400, a month.
Yep.
So just call it $17,000 a year premiums. Then I pay for the first $18,000 before the health insurance plan pays a dime, and then I pay 20% up to my total out of pocket being $25,000.
Wow.
Right. So that's the healthcare.gov plan, and that's where people get in trouble because they don't have $25,000 sitting in the bank. The vast majority of Americans don't have $25,000 in the bank. So under that plan, if I were to go to the ER and it was a $20,000 bill, I would be paying the vast majority of that out of my pocket, with the health plan paying very, very little. So if you don't have that money sitting in the bank, you in essence are paying for something you can't use because you it's going to put you into bankruptcy for most people because you don't have, $10,000 or $20,000 in the bank. On top of that, it gets worse. 1 out of every 6 claims with the healthcare.gov are denied. So if you get denied, then you're responsible for all of it.
100% of it.
100% of it.
That's crazy.
And that's the reason why I started CrowdHealth is I was on a healthcare.gov plan. Yeah. I thought it was going to pay for everything. My daughter has an ear infection, another one. Oh, you got to get tubes in her ears because she got a hole in her eardrum. And so I go to the hospital and get it done in network. I did everything right. My ear, nose, and throat doctor's like, you have to go do this. And I get the bill, and it was $8,000, thinking my health insurance plan was going to pay for it. And they denied it. They said it was medically unnecessary. So, and that happens 1 out of every 6 bills. So, it doesn't sound like a lot, but when it's a $8,000 or, man, think if it was a $20,000 bill.
Oh my gosh,
right? Like,
yeah.
you have a 1 out of 6 chance of that being denied. So that's the downside of those bills. You have all those other payment scenarios too, where you have co-pays and you've got, co-insurance, and you've got deductibles and all those kinds of things. And so employer plan is fine. There's some drawbacks to that. There's a lot of things you got to worry about in network, out of network. Healthcare.gov is even worse because there's all kinds of claim denials. And then, the next one is you can just go completely uninsured, which is fine. I think a lot of people who are within our range, late 20s to maybe late 40s, you're kind of in this place of like, I'm fit, I'm healthy, I eat right. We're all primarily animal-based eaters. We're not going to have a lot of the illnesses. We're not going to have diabetes, all these things. I'm indispensable. Before we started talking, I told you of the story of the guy who was doing things that you and I would go and do. He was out fishing in the middle of the wilderness, and he had, a 44 in his holster. He caught a fish. He leaned down. The gun fell out of his holster, hit a rock perfectly, and, went in his calf, out the back of his calf, in his thigh, out the back of his thigh, into his stomach, and destroyed a bunch of organs. And that's going to be a $500,000 to $1 million bill. Or, I see you working out on Instagram all the time. Like you could, God forbid, like pull something, tear something, do whatever. That could be a $10,000 or $20,000 bill. And it's like, those are the types of things that guys like us have to worry about who are out and doing active things. And we think we're indispensable until you're not, until you're not. Right. Totally. And so, can you, if you're uninsured, have a 20 or 30 or, again, $500,000 or $1 million bill and still survive? Probably not. No. Right. So those are the decisions you have to make with being uninsured.
Yes.
So those are the kind of the 3 primary options that people are looking at right now. And I think they have drawbacks on every one of them. And that's why we built what we built, was our 4th option, which is, hey, being uninsured, but having a community of people who share your lifestyle, who share a lot of the same kind of vision for our being as we do. And if something big pops up, why not have a community of people in the back of you who'd be like, man, I'll help you. And Brad, if you tear your ACL, like, I'm there for you. Like, I'd love to do that. Or if you have a baby, I'm there for you. Like, I would love to help with babies and, people doing things that are active. Like, that's the way we should be living life, is being active and reproducing. Like, those are the 2 most fun things in life from my perspective as a dad to multiple girls. So, that's your 4th option. So I think people have to look at this time of year, those 4 options. Which one do you want to choose? And, I think, I'm biased, obviously, but I made that 4th option specifically for folks like us.